In real life, content provided at the event is for general information only, not intended to provide specific advice or recommendations for any individual. Any performance reference is historical and no guarantee of future results. All indices are unmanaged, may not be invested into directly. Any economic forecast set forth in the event may not develop as predicted, and there can be no guarantee that any strategy will be successful. These thoughts and opinions are those of Gimbal Financial and do not represent the views of LPL Financial. Securities are offered through LPL Financial, a member of FINRA and SIPC, and investment advice is offered through Gimbal Financial, a registered investment advisor, and separate entity from LPL Financial. Happy Friday.
Right back at you.
How are we starting out? It's beautiful here. It's not as hot and muggy as it's been over the last few days. It's beautiful out there.
What's this weekend going to look like for you, Amanda?
I'm laking it up, just enjoying one of the last few weekends at the lake. And then actually I'm attending a concert on Friday too, or on Sunday. My first concert in a while.
I heard Dave Matthews is in town tonight.
Oh, okay.
Yeah, I heard that. That's not who you're going to, because that's 2 days from now.
Right.
He'll probably be in California by then.
Dave Matthews has his own logo. He's one of the very few that does. It's like a dancing thing. It's pretty cool.
Do you have your own logo?
I think I'm going to start after this show and want to work on that.
Okay.
He's a two-night concert kind of guy too. You don't hear that very often.
With all the money that you guys have been making in the stock market lately, one of the best expenses that we made was we did a concert in our living room. I think it's New Year's Eve, where we paid a minor subscription fee and joined the Flying Toasters. That's a recommendation, by the way. I want to go ahead and give that one. That is a recommendation. Go see the Flying Toasters. But yeah, if you want to invest some money, you don't really have to leave the house even to do it, because you can invest in a good time, doing a concert at home too.
That's fun. While you're giving recommendations, I was looking at next week's menu for Turf Restaurant in Castleton. And if you've never tried Turf, next week's probably not the week, but it's the dog days of summer at Turf. And they've got a hot dog menu that looked ridiculous, all the different hot dog choices. So for those Chicago-based people, they got the Chicago dog, but they had a bunch of other funny ones that looked interesting. But if you've never eaten at Turf, it's a lunchtime kind of place to go.
It's like a gourmet place. And so if they're offering a hot dog, it's probably worth the trip.
Yeah.
Really good. Yeah. Another recommendation, hit up Turf. It's great food. They do not disappoint.
You're just cool people.
I feel cooler after I leave there.
Well, that's good. You're cool even going there.
Okay.
You're just cool. Anyways.
Are we going to talk about the markets?
Hey, speaking of cool, this rhymes with cool, and it's back to school. And so back to school is a great time for you all who just work for a living, or maybe you don't, but it's a great time. If you're working for a living, the back to school theme is, this is my homework for you. Back to school theme is to check out your 401k. And look at your 401k and see if you understand what's in there and where is your money going. Each paycheck, a little bit will go into your 401k, and you're buying stuff. Do you know what you're buying? If you're curious, if you want to know what you're buying, I would love to have that discussion with you. I'm sure Keith would too. But so many 401ks today have target funds. Not like Target where you go shopping, but target funds. And a target date fund basically says, okay, I'm going to retire in 2040. And as you get closer to that, bonds start to creep in, because over the years, looking in the rear view mirror, some smart financial people might say, oh, well, let's get a little more conservative. Let's pull out of equities. And that may not be the right thing to do. And so if your funds are getting a little more conservative and they've got some bonds in them, in these target funds, or you want to know how many bonds you own, I'd love to have that back to school conversation with you. It's a great time to look at it. How often do you guys look at your 401ks? I mean, it's easy to just set it and forget it because you're just buying over time. Hey, this is long-term money. But now's a great time as the kids are going back to school. You need something to do.
Yeah, I'd love to have that conversation because I think investing has been dumbed down because of 401ks. I think people don't really understand investing because of 401ks. And I think because a lot of today's workers maybe didn't have a lot of money in their 401ks in 2000, 2001,
Right.
The perception is my 401k can only go up, but
Right.
we could,
Right.
if you want to have that conversation, we can show you what happened in 2000 and it is worth paying attention because sometimes you go into bad markets.
Yeah, like March of 2000 was rough. I know we've gone through some historical context in the past on indices, but yeah, this is like pre 9/11 stuff. March 2000 was rough, and that was kind of a time like this where the tech stocks were just going straight up. It was like 1998 when I first started, and I thought, oh man, this is easy. And then March of 2000 came. And it was kind of like, what in the world just happened here? And I remember there were articles in Barron's and, that times have changed. This is new. Go with this. Well, that could be your target date fund. And so it's just, what else is out there? You've probably got other options inside your 401k.
And as painful as March of 2000 was, if you had sold everything in March of 2000 and just waited a couple of years, you would have been substantially better off. That bear market just drug on. It was just plowing and just wearing on people. And so it doesn't seem to be as painful as, say, if you're a youngster like young Amanda. But if you were, say, my age and March of 2000 hit and it plowed like that, there's some psychological, damage to your investment psyche that you might not be able to recover from.
Jesse Livermore is one of me and Keith's favorites. And Jesse Livermore, I like what he had to say is sometimes there's a time to go fishing. Some quote like that. Point is you don't have to be on all the time. And your 401k, just like anything else, needs adjustments. Maybe not a whole engine overhaul, but just some adjustments.
Yeah, I think I thought maybe one of the comments I scribbled down that I kind of saw last week is that just as protecting your fiscal capital is important, so is your mental capital, because I'm guessing there were people in that market in 2000, 2001 that they just got beat up so badly that they never got back in and missed the last 20-year market. And that can happen. It's less likely to happen when you don't have a lot of money in the market. But if, say, you were 45 and your 401k had grown to quite a nest egg, and then all of a sudden it got whacked in half, you may not be able to mentally, emotionally make the right decision at the right time. So anyway, it's worth looking at.
That back to school theme on your 401k, another thing to look at is if you're 45, maybe you started with the company 10, 15 years ago. And if you're like me, maybe you've had a couple kids since that time, and it's a great time just to make sure you know who your beneficiaries are and make sure they're all on there. And so again, back to school, let's look at your 401k.
If you happen to be lacking one beneficiary, oh, never mind, I was going to offer some names, but
nice.
I'm just being sarcastic.
Yeah, and if you've had life changes, maybe you've had some life changes and you have a new spouse and maybe someone else is on your 401k as a beneficiary, might be worth taking a look at that one too.
Man, what else have we got going on, Amanda? We were going down a
Well, we're back to school, and First Trust is also back to sending out the COVID tracker, which if you watch some of our previous episodes, we were kind of like, oh, it's over, COVID's over. But really, we have to learn to live with it. And so I'll share what the new COVID tracker looks like. And really, they brought this back, I think, because people missed it. I mean, for a while there, we weren't able to report a lot of it, but they just have so much good data in here. And with the fear of the Delta variant and whatnot, we have seen another spike of positive cases, but really the deaths remain low between natural immunizations, vaccines. It's just something that, it's like we've talked about before, it's just something that we have to live with. But now they're bringing, I don't know if this is going to be every week, but before they were just one page, and now they've given us 2 pages.
I think
And
the 2-pager is just for this week.
Okay,
If I read it right.
gotcha.
Something on this, Amanda, like that jumped out to me. If you scroll back up and look at the Pfizer BioNTech versus Moderna and the Johnson & Johnson, I don't know why, but I was surprised to see that J&J, that Johnson & Johnson, that their numbers weren't higher than that. And so there's choice. And that's what's beauty. That's just a beautiful thing in capitalism. Even though like this has government influence and government cheerleading going on, to see that you have choice and what vaccine you want to have in your body, I just thought that was so cool. And so many have chosen the Pfizer. So that's what jumped out to me.
Go Pfizer.
That's not a stock recommendation by Keith,
Nope.
by the way. That's just in general, we are cheering you on.
And cheering you all on for the choices you make,
Cheering
one way
you
or
all
the other. The 2 other things I wanted to touch on, the one thing that does scare me personally are numbers like these when I read that in Tennessee, oh no, not that one, sorry. Oh, here it was. The Tennessee students, only 29% are on grade level in English, and then even less in math. I mean, because of the year we had last year when people or students don't have in-person learning, a lot of people, you know, when they're working at home, can't give the attention to their kids. And so I think our children are really are the ones that got the short end of the stick on this. And I don't know how we catch up from not being as successful or to, I don't know what I'm trying to say, but, you know, our kids are really hurting from not being in school.
Feedback on that. You know, here in our own community in Carmel, the test scores last year were pretty bad. They were pretty bad overall. But I think it's really quite simple. Play board games with your kids at night. Yep. Talk with them over dinner. Yeah. And in the education that they're going to receive at home is going to supersede whatever these numbers turn out to be.
I'd say give them some good genetics too. If they can get some good genetics, those scores are going to shoot up.
Above average.
Those scores are going to kick butt.
Sorry,
I'm sorry.
Sorry, Shreve kids.
I can't help myself sometimes.
But it is true. I mean, to your point.
Yeah.
Yeah. I mean, we can't all be LeBron James.
Right. Yeah. I think. Well, I was just gonna say. I have strong feelings about parenting and educating them, and I just think there's a lot of personal responsibility if I choose to be a parent to be involved in my kids' lives, and I'm 100% sure no school is going to teach my kids the important things that I want them to know before they leave my house, and so that's really on me. And I was disappointed. I thought I saw it somewhere today where I think it's Oregon just decided they're not going to require any certain scores for math or reading anymore. And yeah, I would like for my kids to be able to add and do some basic reading, but again, it's a hard thing out there figuring that out. And I was pretty aggressive on the vaccines last week, and I've I've had a change of heart about that. I've thought a little bit about it. I think my opinion is not necessarily anything anybody needs to know about vaccines.
I wish I could cue some music right now.
Yeah, and I feel like I've stayed really pretty well informed with not only what's going on in this, with data. I spend time with doctors and have pretty blunt conversations. And one thing I would encourage you all, no matter what's going to happen with this Delta virus, we all have the opportunities to improve our own immune system.
Yeah.
And we can do things today that will help us, because that's really the greatest defender of any of these kind of flu type things. And that's kind of the only person that can really help is the man in the mirror. So there's vitamins, there's exercise, there's diet, there's a lot of things that go into this thing beyond the vaccination, and the vaccination could be the right thing for a lot of people, and it may be the right thing for everybody. I don't know. It's definitely a political thing, and I prefer to stay away from those sort of conversations if I can. So sorry for getting a little excited last week.
That's cool. Well, the data, it's good to look at the data, and that's one of the things that we like about this group, First Trust, is they do provide some great data for you to take a look at, form your own opinion, and inform some informed dialogue. And so it's good to see the data back. I'm glad they brought it back.
Could you put that one up right where you had it real quick? I want to just point out something.
Is it down here?
Yeah, that bottom left-hand one there. If
Yeah.
you, there you go. That one. If you had this data for just ordinary flus, which we don't have because you don't get tested for the flu, and so, but if we had that data, I'm pretty sure that those kind of waves that are there is exactly what the regular flu would look like, and it may not spike up as high. However, if you scroll up a little higher on there, Amanda, keep going. Keep going. Oh, wait. That might, influenza. Yeah, go down to the top right of that, influenza death by children. So had we had that wave chart for the flu, we would have lost our mind there in that 2012, 2013 year. If you're looking at children, the flu can be very dangerous for children in normal years. And prior to this COVID thing, I don't think anybody was really arguing and debating about that, or weren't closing schools down. But if you look at what happened with COVID, it's just not comparable to some of those other things. So I think we can be cautious in the way we carry ourselves. We can increase our immune system, and we can just relax a little bit.
And this stuff, kind of even goes back to our discussion on the 401k, because right now, I think we're done with that, Amanda. If you want to chat, doesn't turn on. There's employers here in Indianapolis that are announcing that they're requiring their people to be fully vaccinated by mid-November. Some others are saying if you want to come back into the office, you need to be fully vaccinated. And I spoke with one of you this week where that just didn't jive with you. And so that affects your health benefits. That affects your ability to express your creativity and your unique skill set. And so even just talking through your plan and what you're about, where you want to be in the future, the COVID vaccine could have a big influence on that for you. Yeah. That's something that we never would have thought of 3 years ago. We wouldn't have had that discussion, but it plays into, are you carrying out what you're about, even during your workday?
Let's jump into the market, shall we?
Yeah. I've been encouraged by the market here recently. I know Keith and I were talking about it Monday or Tuesday this week, just to see some of the stocks inside the S&P 500 or the NASDAQ that haven't received a whole lot of love over the past 18 months. They've started to show up on our stock screens.
Yeah, and I threw up the NASDAQ here, and basically you can kind of see these last few days here, we hit this level a few days ago, and since we talked last week, the NASDAQ looks to be kind of in the short term, kind of trending down a little bit. Not a lot of volume over here. This bottom measures the amount of people that are voting with their money, and that's dropped off quite a bit from where we were in the first half of the year over here. And that's just not unusual. People go on vacation. Yeah. There's not as much trading during the summer months, but that's kind of what the NASDAQ looks like. Quick look at the S&P 500. We talked about last week how it's just been kind of trending like this, and nothing's really changed on it. It's just gradually chugging its way up. People want to go in there. And then we also talked about the smaller companies last week, and that the smaller companies are just, they've basically gone sideways since January, February timeframe, and they bottomed out short term right around, what is that, about middle of July, and they're trying to get some momentum and get back above. And we call this line right here, this red line, is what's called the 50-day moving average. And I think the best way I could explain that to you, if you have 50 states in the United States and they can all vote for an office, and they all start placing their votes and they get to replace them, that you'd line them up in 50. The last 50 days would be them voting. And some days like this one over here, they voted really heavily for something. And that volume is just like in an auction. The more people that want something, the more it can push it up. And then if you have these real light voting days here, like right before the 4th of July, they're just not, there's not a lot of conviction to push things up in value. And so the S&P 500 or the Russell 2000, they've just been kind of laggards this year, and we've had some money in there for clients. So and on your statement, you'll just notice that section of the market hasn't done quite as well as others that we've put some money in.
Yeah, I was talking with a client about this yesterday. We're going to keep that up there on the S&P 600 for a second. And they had a mix of their 401k in the S&P 600. And the conversation was, this hasn't done anything. What have you done for me lately? But as you can see, those straight horizontal lines, that's okay. That's a healthy thing. It's coming off a great run up. And this is just kind of settling down a little bit, and the shareholders are staying pretty steady. And so we'd like to see this break out on the upside. We could do it, and so we kind of like this space right now. It looks pretty good.
I thought I'd give you all a little bit of training today. You mind if I share some training with our friends today, Doug?
What kind of training are we talking about?
We're going to talk about stocks today.
Stonks?
Stonks.
Where's Mr. Stonks?
Here. Should I use this as a pointer?
I love that guy.
He's unimpressed.
I haven't seen him for a couple weeks.
Yeah, he's unimpressed. I've been giving you all data the last few weeks. I just want to talk you through some of that data I've given you. I've said the 200-day moving average, which on this chart is the black line right here. We've talked about the 50-day moving average, which is the red line right there. And then the 21-day moving average is this green line right here. And it's just showing you what's happening in that span of time. And to, if we do have a shift where we go from a bull market to a bear market, it's going to start showing itself on the shorter term average prices to the midterm. And then if it gets down to this 200-day moving average like it did a long time ago, then things are maybe a little more challenging to manage. And sometimes those things can stay below that 200-day for a while. So let me stop sharing for a second, clean up my screen here. And so this week, we have 3,485 of the 8,900 stocks that we follow that were below their 21-day moving average. We had 4,188 that were below their 50-day moving average, and we have 2,600 that were below their 200-day moving average. Both the 50-day and the 21-day moving average numbers had improved over last week. The 200-day, we've got more stocks that are trending down long term, and our compliance folks try to protect you all and make sure that we're showing only things that are within this parameter. And what they specifically told us at Gimbal is that we could talk about stocks if we show the closing data, which is number one here. That's the closing data. That we could show earnings per share data, and that's what this is down here with the number 2. And the financial data, these boxes up here go through the financial data. And if there were news events, they would show up here. Those are the 4 kind of constraints.
Did you want to show those? Are you sharing them or no?
Do you see the screen?
No, that's.
Oh, sorry about that. I got to go backwards and go do this again for you. So on this example of a stock, and we're not recommending this stock. 1, here's the closing price of yesterday. This is not today's price. This is historical data. This over here, number 2, is the earnings per share, which they said we could show you. And then financial data is in these 2 squares. And then if there were news on this, it would be in that section. And so basically, in order for us to talk about stocks, we need to have historical data. And we're not making any recommendations. We're just trying to educate you a little bit. So these fit within the guidelines that we were given. And so just want to give you an example that this stock right here was doing really well in 20 and 21, beginning of 21. It peaked out, went from $400 and some odd all the way to almost $1,500, $1,400. So almost tripled in a very short period of time. And then you see right here, this black line is the 200-day. This red line is the 50-day, and this green line is that 21-day moving average. And so this stock first broke through the 21, then it broke through the 50, then it broke through the 200-day, and it's all the way down here today. And the investors that just wanted to buy and hold that their value of that account is 50% less. And there's times when you could trim up. It's not unpredictable if you see this kind of thing crossing over that 50-day moving average. If you've had that kind of run up, it's maybe not a bad time to take a little bit of profits. And so that's one of the 2,600 that were below the 200-day moving average. And here's another one that has all that same historical data, but it's also below the 200-day moving average, but it's just barely about it. It's trying to, the 50-day, it dropped right here really badly on earnings news a few months ago. And that dropped it below the 50-day, and then it's just been struggling with that since then. But what's maybe a little different looking on this particular chart than the last one I showed you is this 50-day is trying to get back above the 200 days, so it's trying to gain some strength.
On that one, Keith, where the earnings news, you might look at that earnings news and say, how could it have dropped like that? I mean, their earnings were up 130%.
Yeah.
But it's the expectation. And so, when Caroline wants me to be home at 5 and I'm home at 4, that's good. When I'm home at 6, not good. It's the same thing with stocks.
Yeah. And this is one of what they call the FANG stocks. And so, these things can go out of favor. And I don't know what's going to happen with Netflix going forward, but that's one of the FANG stocks that's below the 200-day. And then this is one that we had looked at for investors this year, FedEx. We looked at it right here because we thought it looked like it was going to grab that 50-day and go up, and it did. But we thought if we were in it, we'd get out of it right here because it couldn't hold the 50-day. And so from this 274 price there to all the way over here, I just wanted to point out the span of time that if we do buy an investment for you and we're wrong and we just keep holding it, not only is there the risk that we lose your money, but we've lost that period of time. And so when we make decisions, we're going to be right some and we're going to be wrong some. But part of the reason we're not just buying and holding is because this stock, we don't know what the future has in store. It could just round up and head towards 150, but we were able to look at this in order to try to get a profit on it, and yet it's not really gone anywhere in this last was about 125 days. And so that's something I'd say too. If you've got stocks that you're holding on to, you might want to look at how long they've just been going sideways. But that's all I got for training today. I just thought I would share something unique with you all today, and we hadn't talked about stocks in a while. I just wanted to kind of tell you when I've been showing you the 50-day and the 200-day and 21-day, it just gives you an idea of what's going on in the process of those stocks.
Very cool. Well, if we had more time, we could talk even about point in time risk further and pyramiding in and pyramiding out. I mean, there's a lot of, we think, exciting things to talk about with stocks, even if you're talking about a household name. It's been around forever, let alone some of the smaller company names that you may never have heard of.
Well, the markets are exciting. We're here to help in any way we can. Amanda, what else do we need to say before we wrap her up this week?
That's it. Just have a great weekend and see you all next week.
All right. Have a great one.
Bye.